Good morning, toddlers. Welcome to today's edition of Toggle's Daily Video Insights. Today, we're going to take a look at why Docusign could be poised to bounce almost 18% over the next 4 weeks. And it's all to do with momentum that has been stretched far enough into the negative territory that historically it has tended to bounce here. Now, as you can see, actually, Toggle really didn't have much to say about Docusign recently, but which makes this current insight all the more interesting. So clicking on this, we're going to take a look into the details of what exactly is it that's powering this insight. Now, as you can see here, there have been 10 similar occasions that were used to generate this projection here that gives you some sense of, should history repeat itself, what would the range of outcomes have been based on those other 10 episodes. And of course, again, if it were to dip below 256.91, something else is driving this particular stock, and so it's time to reassess the risk. Otherwise, 332.33 is the designated level at which history would be roughly matched by the median outcome. Looking at why it might move, you can see exactly that when previously momentum as it has now has dipped below zero. This is the short-term momentum, the very short-term momentum 1 week, and this is due to this consolidation that we've had here. That has historically meant that the stock has probably seen enough of the consolidation and typically bounced. And so as you kind of squint a little bit and look at this chart, you can see these outcomes and how positive they were. A better way to see this is clicking on the past performance here. And now you can have all of those past returns, the 1 month returns across the 10 episodes, the trading windows around them. And you can see that the vast majority of them are positive. But most importantly, the ones that were negative were very slightly negative. So really you have quite an attractive risk reward, which makes sense for a situation like this, because historically this was obviously following a period where the stock had either been selling off or consolidating. And so a lot of the selling pressure might have been exhausted. Anyway, just another stock for you to take a look at, see if it fundamentally fits your thesis. Obviously, as people are doing more things online, DocuSign presumably is doing better since there are no people going into the office signing these documents, or at least fewer doing so. That's as much as we have for DocuSign today. In the daily brief, we're going to talk a little bit about the current chip shortage. So please take a look. It should already be in your mailboxes. If you don't have it, you can subscribe and sign up at Toggle, .global, and you'll receive a daily dose of market relevant content that hopefully is going to spark some interesting ideas, trading ideas for many of you. Otherwise, like this video or subscribe to our YouTube channel, and you'll be getting a lot more of these insights, daily video insights. We try to really show you how Toggle is breaking down the barriers between the vast universe of fundamental data and individual investors. Thanks again for your attention, and we'll see you again tomorrow.